Hi, I'm Jack Bender. I cover domestic materials for the AIM Small Cap Fund. I'll be pitching Worthington Industries today with a current price of $57.15 with a price target of $70.61, representing a 23.56% upside. Worthington Industries engages in value-added steel and manufacturing of metal products. The company delivers innovative solutions to many industries such as automotive, energy, retail, and construction. Worthington operates 58 facilities in 16 states and 9 countries, employing approximately 9,500 people. Worthington operates through 2 segments: steel processing, 65% of revenues, and pressure cylinders, 35% of revenues. Their revenue is predominantly from the US and Canada, and the company was founded in 1955 by John H. McConnell and is headquartered in Columbus, Ohio. Worthington is North America's premier value-added steel processor and producer of laser welded solutions. From 2016 to 2021, their revenue has grown at a 2.4% CAGR. However, they saw a significant decline in fiscal year 20 due to the pandemic, which they have since rebounded from well. They have made 4 acquisitions in fiscal year 21 to drive growth. They are also divested from various businesses which did not focus on their core business. This included the selling of a majority interest in Nikola Corp, which led to an unordinary gain of $655.1 million in fiscal year 21. Moving forward, Worthington is moving into electrical steel laminations production. This will allow them to provide products such as electric motors, transformers, and generators, which will serve their customers' demand as they move towards electric vehicle production. Worthington saw an inventory holding gains of $75 million in 2021. This was due to increased steel prices, and with current futures pointing towards higher prices, this will bode positively for Worthington in the near future. It is recommended that Worthington, ticker WOR, be added to the AIM Small Cap Fund with a price target of $70.61, representing a 23.56% upside. In 2021, the Detroit Big Three auto manufacturers increased vehicle production by 6%, and North American vehicle production increased 11%. With large auto manufacturers moving into the electrical vehicle market, Worthington has made strategic acquisitions to position themselves for further growth. Ford, one of Worthington's largest customers, has announced they're expecting electric vehicle production capacity to reach 600,000 units by 2023. The electric vehicle market is expected to grow at a 36% CAGR to cross $14 billion by 2026. Given that Worthington has long-standing relationships with the automotive market and with the largest auto manufacturers, they are positioned perfectly to capitalize on this future growth. Worthington made 4 acquisitions totaling $490 million in 2021. These 4 companies are Temple Steel, Shiloh Industries, General Tools and Instruments Company, and PTEC Pressure Technology. Temple Steel is a large shift for Worthington as they are diversifying their product offerings into the electrical steel market. As Temple Steel does $377 million in annual revenue and is penetrating the electrical vehicle market through the sale of electric motors and transformers, which are estimated to grow at 9% and 5% CAGRs through 2025. The acquisition of Shiloh Industries includes 3 facilities that will be used to expand capacities of Worthington's TWB joint venture, which focuses on laser welded solution for the steel processing segment. General Tools and Instruments provides hand tools, pressure measuring, and inspection tools primarily for the home improvement. The home improvement market is currently valued at nearly $800 billion and is projected to grow at a 4.6% CAGR to $1.09 trillion by 2028. Worthington's investment and acquisition show its management's commitment to long-term growth and being the market leader in steel processing. Worthington's joint ventures include Consolidated, Samuel, Spartan, TWB, and WSP, and unconsolidated, Artiflex Manufacturing, Clark Western Dietrichs, Serviacero Planos, Taxi Workhorse Holdings, and Wave, These joint ventures have led to Worthington receiving over $1 billion in dividends over the last 10 years and approximately $115 million in 2021. The consolidated joint ventures all serve the steel processing segment focused on the automotive industry. Unconsolidated joint ventures grew their net income 13.5% in 2021 from $259 million to $293 million. Specifically, Clark Dietrich's and Serviacero were the reason for this jump in earnings increase. These two joint ventures are largely dependent on the price of steel, which is projected by futures to increase 9.22% by the end of year 2022. This increase in steel prices will bring a significant positive impact to Worthington's joint ventures. To calculate an intrinsic value for Worthington, a 5-year DCF model was created, using a terminal growth rate of 1.5% and a WACC of 9.39%. An intrinsic value of $76.79 was reached. A sensitivity analysis of the terminal growth rate and WACC of plus or minus 50 bips ranged from $67.61 to $84.15. Additionally, a PE multiple valuation was calculated using a weighted peer multiple of 9.59 times, resulting in a relative value of $50.24. Finally, a price-to-sales multiple valuation was calculated using a weighted average peer multiple of 0.87x, resulting in a relative value of $62.15. By weighting these models 70%, 15%, 15%, a price target of $70.61 was reached, representing a 23.56% upside. Worthington pays a dividend currently yielding 1.9%. Worthington has a significant commodity price risk. The price of steel has a direct effect on Worthington's operating margins. Should the price of steel see a significant decline, it would have a material effect on the company, and inversely, should the price of steel rise, Worthington would have a significant gain. Worthington also relies on key customers. More than half of Worthington's net sales of steel processing segment comes from the automotive industry, and specifically Ford, General Motors, and Fiat Chrysler account for a significant amount of revenue. Furthermore, should there be a new COVID-19 variant, it could have a significant effect on the economy. If the economy and automotive manufacturing was slow due to COVID-19, there would be a significant effect on Worthington. John P. McConnell is the executive chairman of Worthington Industries. McConnell has been on the board of directors since 1990 and was CEO from 1993 to 2020, before transitioning to executive chairman. Andy Rose is the current CEO and president and has been with the company since 2008. He was previously CFO and became CEO in September of 2020. McConnell is also the key insider holder of Worthington, holding approximately 33.71% of shares.